The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 9th. Terrific Tuesday edition of to the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the newsletter service that is the intelligence for creating financial freedom. I hope everyone out there is off to a great start of their day. If not, let's make sure that we do that and that we have the most extraordinary and terrific Tuesday. I know I will, and I'm going to do everything I can here during the next hour to assist you with identifying where price is likely headed to. We'll utilize tools like our A to B equals CD pattern, our lightning bolt pattern. We'll look for bullish and bearish reversal signals because the bulls and the bears, they leave signs for you and I each and every day. We'll take a look at Fibonacci expansions and contractions. We'll take a look at anything we can or that we need to. We'll take a look at TAS market profiles, Chapman wave counts, anything. And of course, you can always give us a call. I'd love to hear from you. 877-927-6648 or 727-445-1044. Either number will get you right through. Lines are open. And we're spinning music out here. Hey, let's always remember, folks, let's never, ever, ever be a prisoner of our past. But instead, let's make sure that you and I are always pioneers of our future. It is Terrific Tuesday. This is Tiger Financial News Network. Thanks so much for tuning in. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading off 80 points, trading out of 17,031. S&P down 7 at 1994. NASDAQ Composite off about 12, trading at 45.80. Russell 2000 off 7 at 11.65. NDX 100 off 6 points. New York Stock Exchange down 42. Goldilocks up $1. Silver up 4, not even silver's flat, trade out at $18.97. Light sweet crude up 53 cents, trade at $93.19. Leading the charge, the upside out here, you've got Netflix up $7, up 1%. United Therapeutics on fire, up $4. Hain Celestial up $3.50. Tesla up $3. Mobileye up $3. Align Technology Systems up a couple of bucks out here. So the downside, Google, Amazon, Rhhodes Holdings. You know, in the last hour, I mentioned I'd come back and tell folks where Rhhodes is heading to. And, of course, our man Alberto in the control room was kind enough to go ahead and play a Boz Skag tune, Lido, and during the breakout there. And the reason I didn't come back, and I apologize for not telling you where it was headed to, I don't know. Everybody inside that equity is basically in a losing position. So it's at its lows, its all-time lows out there, so no telling where that equity is actually headed to. Alliance Data Systems off $4, down about 1 6/10%. Goldman Sachs, $3, down $1.55. Biogen, BIIB, off about $2.58. The direction shares for the financials up is off about, that's the bullish side, is down about $2 out there. All right, so where do we want to begin? Let's do this out here. Right now, I want to go take a look at the indices. I'm going to take a look at, there's a tool that I have been developing with the assistance. It's not actually I've been providing the information. Good, really great group of programmers that have been helping me to develop the primary trading range boundary lines. A little nuanced, different than the way that Bud Rolfs has used it. Similar, but yet still a little bit different. So we're going to take a look at the tool still in works, but I think we've got it pretty much honed in. A couple more modifications, and I think we'll have it all the way. Let's go take a look at the S&P 500. Now, what we're looking at here, this happens to be a daily chart for the S&P 500. And we're taking a look at the horizontal lines that are going across my screen. Hopefully you're watching us on Tiger TV out here. The market builds floors. And that's really what these horizontal lines of support and resistance mean. Now, the cool thing when I first listened to Bud Rolfs, because I have loved Japanese candlestick charting out here, and when you take a look at the Japanese candlesticks, it is truly the body of the candle that is truly the essence of price. That's where your information comes from. If you know, those of you, and I think everyone that's listening here listens to Tom O'Brien, he takes a look at swing points and tells you that's where things squawk, talk, and walk, where you get the real release of information. When you take a look at a candlestick, it is truly understanding the body of that candle. Can the wicks provide us with information? Oh, yes, they most certainly can. But it's really the body of that price that provides us with the true essence of what's going on. Well, what's interesting is that when you take a look at either horizontal or diagonal support and resistance, what Bud was also doing is only taking a look at the body of the candle. Now, that's so cool. Here, we're taking a look at the S&P 500. The green lines going across my chart out here, those happen to be the weekly primary trading range. Let me actually just switch over to a weekly chart out here. I'm going to do this. This is the S&P. I'm going to actually turn off of the daily. Give me a moment here. I'm going to come back here. We're going to get rid of some of the lines out here, make it a little bit clearer, a little bit easier for you to see. Now what we've got here is the weekly chart. So we're taking a look at the weekly chart here for the S&P 500. This is taking us back into 2009. Well, it's actually taking us back much further than that. This is taking us back into, if I want to really squeeze this down, we can go back into the 1990s, 1996. Now I'm going to go ahead and pull this forward here a bit. Now the dashed line, that's on my screen out here. Do I have that turned on? There we go. The dashed line, which is a price point of 1122.63. If you take a look at the entire history of the S&P 500, that price area, right around it, don't worry about the pennies, don't worry whether it's 1123, 1124, 1125, right there in that 1122 area, the S&P has had the largest number of opens and closes, right inside that range. The next area that has the largest number of opens or closes, right around the 1265 area, 1266 range. So I'm right back here if you're watching this on Tiger TV and you see my cursor. And so we can see the different floors that are built out here. Now, the cool thing is that when price breaks through one floor, it wants to go complete the next floor. Well, in the case of the S&P 500, that was up at the 1409 area. Gets up there, comes back and tests the bottom floor again before it's ready to start moving higher, which it did back here in March of 2013, got up to that 1552. I'm going to go ahead and explode this up on my screen here a bit for you. Typically, you get up to a floor, that area acts as a resistance, or if you move down to a floor, it will typically act as support. What happened here as price got up into the March 4th level and got just above that floor in that 1552 level? Well, on a weekly basis, we saw a number of tests, in fact, all the way until April 22nd, before price decided to take off and go ahead and try to build its next floor. What did it do? Got up into that next floor level, 1695 level. Pulls back and tests it back into June 24th. It's a weekly chart we're looking at on my screen. What does it do? That holds as a support level, makes its way back up, decides, hey, I don't want to make it all the way back up there. What does it do? It comes back and it tests its midpoint level, right around that 1624 area. Finally gets up and over it with some conviction. The week ended October 14, 2013. What does price then do? Let me pull this back. Let me expand it so you can watch this on the chart. What does price do? Gets up to its next level, 1839. Gets up there, comes back, never really retest this area here. 1695, that's important to notate out here, because if we ever do see a real cracking of the S&P 500, price will likely come back and test that, because you like to see something when it breaks out, you like to see it come back and test it. It did not do that. Does that mean that that's where price is going to fall back to? No, but it is something to note. It's something to put down on your pad, something to be watching. Here, if we continue moving forward on it, the week ended February 24th, 2014. Price starts to break through that 1839 level. What happens? We see a bit of a pullback here, April 7th, a little scare back in there, and immediately that following week, April the 14th, gets back above that 1839 level. What does price do? It gets up and runs right into the next primary trading range boundary line, right up there at the 1982.50 level. It stalls out here. It actually pulls back, and it pulls back where? Right in that midpoint of 1910. Now, where are we? Where we are, if we take a look at the weekly chart here for the S&P 500, is we are now up above that next level, 1982.50. So we're at 1993.68. So if I were to ask you, what's the area that we really need to pay attention to right now inside of the S&P 500, I know that each of you, I can see, hold up your hand if you think 1982.50 is going to be an important area for us to watch inside the S&P 500, especially with it being Full Moon Tuesday. Could we actually see it move down to 1982.50 today? Yeah, we're only talking about 10 or 11 points out there. That would not be a huge deal. What we want to watch for is any test of that 1982.50 level, and again, it's a weekly chart that we are looking at on my screen out here. We take a look at the weekly chart. That would say if the 1982.50 level holds, and all we see is just maybe a 1, 2, 3 day pullback inside of the market, that where the S&P wants to move to is where? 2125. It first has to get that midway point, that midpoint 2054, but 2125 would be next on his card. What do we know about the S&P 500? We know the S&P 500 over the long haul wants to get up to 2350 out there, and that is to complete its measured move of its consolidation breakout. So here's the weekly chart for the S&P 500. 1982.50 is a key level of support. If it breaks that area, we're likely going to come all the way back down and test that 1910 area. That's what's going on inside the S&P 500. I can switch it back to the daily chart out here. Let me see if I do that here, and I come back to the daily chart, because the primary trading range boundary lines, because we're just using the body of the candle, what we will notice is that and I'm going to go ahead and turn that on, so give me a moment here. There's the weekly. I'll turn on the daily primary trading range boundaries for us out here. Cool how these floors work, isn't it? And what you're going to see, the solid lines out here, they represent the primary ranges. The dotted line, I'm going to have to make these dots a little bit bigger on my chart. I'll do that maybe when we're off the air or what have you. What we can see here right now, and the reason, because we're using the co-located opens and bodies of a candle out here, and so a weekly close is going to be different than 5 daily opens and closes out here. And that's why there's a little bit of a difference out here. 1982 is the weekly, 1995.75 is the daily. And what we can see here is right now, what have we seen here on the daily chart? Remember, if you were listening to the last hour or over the last several days, I've made a big deal about the fact that we've had narrow-bodied candles right in this 1995 level. Well, guess what? Now that I've got these primary trading range boundary lines on here, what we can see is that it actually makes sense. Now, this is a sign of a market that's tired. That's why in that 1982.50 area, it's going to be an important area of support if, in fact, price gets back down there and tests it. But what we can see on the daily chart out here, price is just hovering right around that 1995 level out here. If, in fact, we see a break below 1982.50, pretty good chance where price is going to pull back to is the 1926 area. 1961 would be its first target out there. That's the daily trading ranges inside the S&P 500. Whoops, didn't mean to do that. Let's go take a look at a couple of the other indexes out here. Let's go take a look at the NDX 100. That would make a lot of sense. As we take a look at the NDX 100, we're just going to take a look at the monthly and the weekly chart out here. So let me go ahead. We've got the weekly chart on my screen. Let me go ahead and switch over to let me see what happens if I switch over to the monthly time frame. I might want to switch back to the weekly. Yeah, I'm going to switch back to the weekly. I'm going to switch back to the weekly out here, and I'll just leave the monthly primary trading ranges up here. And we'll go, when we get back from this breakout here, we're going to go take a look at the same patterns out here inside of the NDX 100. Inside the NDX 100, guess what, folks? It's poked its head above the monthly support level of its primary trading range. It actually says that we could see the 46.57 area if, in fact, this area holds. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 86. S&P is down about 9. Composite, see, who's leading the charge on the way down? No, it's the Russell 2000. It is the weak link out here, off 0.8% as we speak right now. Let's go back and take a look at those floors that have been built here inside of the indices out here. We were taking a look at the... Give me a moment here, index BTRs. There we go. We were taking a look at the Dow. So now on the Dow, what I've actually got up here on my chart, if you're watching this on Tiger TV, I've got the weekly chart, but I'm showing you the monthly primary trading range boundary areas. And as I pull this back a little bit further, you can even see on a weekly how these areas act as natural levels of support and resistance out here. Just, beautiful how price behavior works out here. Price makes its way up to the top of a primary trading range. Did that back in April of 2002. And again, it's a weekly chart, but it is the monthly numbers that we're taking a look at. Price is unable to break through this level. It tries it several times, pulls back to that midpoint, finally breaks through on the week of April 29th, pulls back and it tests that level on June 24th. And then up to the races, up to that next level level. You can see how in this case here, inside the NDX 100, it was did a good job of testing that 3430 area. That was its next PTR level. Now what we can see here inside of the NDX 100 is we can see that it has gotten up above the 4,055 level. 4,055 is its primary trading range boundary line on a monthly basis. Right now you're trading at 4,082. If the market's going to crater, you're going to see any kind of significant pullback, you're going to see the NDX 100 on a weekly basis get below 4,055. It's really that simple. If it gets below 4,055, we see any kind of conviction behind the move. What we're likely to see is a run down into about the 3646 level out here, which is the monthly midpoint. If I go put the weekly, let me go turn the weeklies on now and see what those levels show up as. Here are the weeklies. They're going to be pretty close. Now let me turn the actual monthlies up so that we get inside and take a look at the weeklies on a weekly chart. Inside the weekly area, real key here, level is a little bit different again than the monthly. Remember, we're using the body of the candles out here, so 4,029 is that weekly primary trading range floor. A close below that says the 3820 level is the likely target for any kind of a pullback. Do we have that in place here right now? We don't. That's why this 4,029 to put that down because I forget the number, 4,055 are going to be key levels of support inside of the NDX 100, which has, just simply been on fire. So that takes care of the S&P. That takes care of the NDX. Let's go take a look at the Dow now. Let's go see what the numbers pop up for us on the Dow. Inside the Dow, I've got a weekly chart and its weekly primary trading range boundary lines. Well, what do we know? If you take a look at these floors out here, we're into the next set of floors. That next set of floors actually takes us up to 18,123. If the markets, if this is a buying opportunity over the next couple of days, or even today as we move down into a full moon, moving down into a full moon is actually bullish out there. So we want to be paying attention to that. If we see that the markets really don't crater and fall apart, what you can expect the Dow to do is move up into the 18,123 level. We take a look at these floors inside of it. If we go take a look at the, let's go take a look at one of the other indices out here. Tile range, there we go, tile out here. There we go. Let's go take a look at, so we got the NDX, the Dow. We did the, let's go take a look at the SOX index. Let's go take a look at the SOX. Inside the SOX, let's look at the weekly numbers out here. As we take a look at the weekly numbers, guess what? It's above its support area, its next floor that it's trying to build, 637.70. Any pullback in a 637.70. Remember, what the SOX tried to do here, and this is the week ended June 30th, the SOX tried to get above their primary trading range boundary line. In fact, it did get above, came back and tested it. When it failed, it came back to where? It came back to that midpoint level right around the 594 area, back above that range. 637 is going to be an important inflection point, an important area for the SOX index. If, in fact, that level holds, what can be our expectation? A move into the 681, an eventual move up into the 725 area for the SOX. Let's go take a look at the Russell 2000. We take a look at the Russell 2000, see what it is doing out here. The Russell 2000, the yellow diagonal lines on my screen, that happens to be the rising price channel inside of the Russell 2000. That takes you back to where? To 2009. It has been one heck of a nice diagonal level of support and resistance out here. Now, if we take a look at what it is doing on its daily chart, the real level of support for the Russell 2000 probably in that 11 to 20 area on any kind of a pullback. I believe that because of this is a daily chart inside the Russell, that's also a pretty decent area of support. I think 1107 is actually the number because of the consolidation pattern that it is in. Steve Rhodes, TFNN, 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 81 right now. S&P down about 8. NASDAQ Composite off 14. Let me see what's going on over in Europe as we speak here. Over in Germany, not that big of a deal over in Germany. The DAX is off 56 points, hasn't moved too much. Since the open, the FTSE's down 16 points out there. So let's see. Moving to the upside, we've got Annie's. That's a buyout by one of the firms. Who's buying them out here? General Mills buying out Annie's. So they've had a nice 37% premium inside of that equity this morning. But moving to the upside, you've got Netflix. You've got Sino Cooking. SCOK. Is the Sino Cooking Coal and Coke Chemical Industries. So that is moving to the upside out here. That's a pretty large, pretty wide-ranging bar. What's the news behind this? New underground coal gasification project, gross profit of $30 to $45 million expected. So on this news here, boy, take a look at this wide-ranging bar. Here's an equity that's basically done not too much. I guess was there accumulation going on? Somebody knew something was starting to take place back in June of 2014 because it was trading 10,000 shares, 15,000 shares a day, and then all of a sudden, boom, 1.5 million shares. Well, man, take a look at this thing this morning out here, up at 684 with some good volume behind it, 7.2 million shares out here. But they got to be suspect on this. Don't go chasing this thing here as we speak right now. Ticker symbol there is SCOK. Let's take a look at Alliant Tech Systems. ATK is the ticker symbol on this one. This is trading up just slightly. Let's take a look at it. It actually gapped up this morning. This is going to run into some potential problems out here. Let's see. Trading into a swing point, or was trying to trade into a swing point from August 21st that has 121,000 shares. Today's volume, good volume today, 371,000 shares. Should be able to get inside there and test the 134.11 area, but this thing has got some problems in it. Big downdraft session from May 15, 2014. Ticker symbol there, ATK. If we take a look at, let's see what else. You've got Haynes. Let's see if there's something we haven't looked at. Pioneer Natural Resources, PXD, is the ticker symbol. It's up $2 and change out here. This thing has been struggling as of late. Took out a B point, it looks like, yesterday. Let's see if there was any volume behind that. The swing point is that I'm looking at first is August 14, 2.8 million shares. Yesterday, only 1.6 million shares out here. Let's pull this back a bit further and see if we can find some levels of support inside of this. So what this equity has done, there was a sign of strength. Let's go draw the horizontal line on my chart out here. This had a sign of strength. The trading session was May the 7th. So we're going to draw the horizontal areas that I would take a look at as being support for this equity. First, this breaks out, volume 3.1 million shares, May the 7th. You go back, take a look at the prior candles low, and then I say take a look at a couple candles before that, see if you see some light volume or if there's a swing point in the nearby area. Well, we got a swing point, which takes us to April 28th. So your range inside this equity, 189.16, 197. It ought to act as support. However, you haven't seen any kind of reversal. Yesterday's candle was not a hammer candle. It looks like a hammer candle, smells like a hammer candle, but that was not a hammer candle. There is a hammer candle right back here. That's on the trading session of May 16. The body here is too large, needs to be at least, the wick of the candle needs to be 2 times the size of the body, and that is not what we have inside of this. Now, will it find support out here? I don't know. Let me take a look at the weekly basis for this equity. We're looking at Pioneer Natural Resources out here. PXD is the ticker symbol. And here's a hammer candle. How about that? Talk about hammers. That's all the way down here at the trading session from the weekend at April 7, 2014, the top of which is 188.93. So 188.93, maybe that holds as support. Happened to be that breakout area from April, in this case here, it's the weekend at April 28th out there. So we'll watch to see if, in fact, it can find some support there. But as we take a look at the weekly chart out here, you'll see there's nothing bullish from a configuration standpoint, candle-wise here, as this has moved lower that we can identify, or that I can identify. Let's take a look at some things moving to the downside. Let's go take a look at Amazon, AMZN, up $7, or down $7 as we speak right now. Amazon, this is the weekly chart. Let's take a look at a daily chart for it first. We take a look at the daily chart here. So Amazon was doing everything it could to get back to the highs out here. It has a huge gap down with big volume behind the move out here. 17 million shares to the downside, kind of in nowhere's land out here when you start to get inside the gap. Let's see here. As was moving higher, the trading session of September the 4th, you get a doji candle out here the very next day, a sign that the market could be tired because we haven't really gotten to a resistance area. The leaves fell off the tree here yesterday, 2.9 million shares to the downside, and voila, you got price moving lower here today, 1.4 million shares. So this is now starting to have some volume. Amazon, very likely to head down to now. It's got an island bottom reversal. All right, so let's take a look at that candle. Let's take a look at that pattern. Between the trading session where it had that big gap down from July 25th, 17 million shares, it created this little island out here. That island was created all the way up until the time frame of August the 12th. I guess they were building high-rises in that island out there. Maybe it was an airport. And then price took off from that airport. That was on the trading session of August 13th. Volume behind the move, so-so, 4.9 million shares. It's not too shabby, but still, just kind of so-so. And that created this little island. Where should price come back to? Well, price ought to come back to 326.14. Maybe it actually comes back and it tests the where the island formed and got created, and that might be the 321 level. Here's the key with this pattern. If we ever see, if we see Amazon trade below the bottom of that island, that would be the low from August the 1st, 304.59, the island will have gotten run over by a tsunami of sellers out there, and that would not be good because there is nothing more bearish than a failed bullish pattern. What we know about Amazon as we speak right now is the pattern out here is bullish. The pullback, let's see, the volume that it's got a 4.9 million shares and it's pulling in there. It's got volume, so it's pulling. It's not to that swing point, but it's pulling back with a bit too much of volume as we speak right now. We'll look to see if, in fact, that level can hold. AMZN is the ticker symbol. We're talking about health inside of the Tiger's Den. Folks, if you haven't tried the Tiger's Den, rush over to the homepage at TFNN.com. Go test drive the Tiger's Den for the next 30 days. We're talking about health, and you can see if we actually have me on Tiger TV right now. I don't know if Al's got me or the chart, but here's my green juice out here, and there is nothing like it. Go Google Joe the Juicer, or what's that movie that he put out there? The movie that he put out there was Fat, Sick, Dumb, Almost Dead, probably all those types of things. Go watch it. It's a pretty cool 90-minute movie out there. And if you're looking to improve your health, my suggestion is to make juicing a part of your everyday Fat, sick, and nearly dead. Thanks, Al. Make juicing a part of your everyday. There's nothing like consuming water. So I've got my water here, of course, and some green juice out there. Your health will improve so much. You will feel so much better out there. And I've just used really the standard drink. That's celery, cucumbers, kale. I put spinach in there, lemons. I put apples and ginger just to spice it up, and it is just simply great. Maybe, and look, I've been drinking a shot or two shots of wheatgrass for forever. Seems like forever. Probably at least 15 years, I figure. Thank goodness Whole Foods had opened up way back when. And let me tell you, I don't really care for the flavor of wheatgrass. So I've got different things that I use to actually just kind of down it. I'll use maybe a little scoop of peanut butter, almond butter, and I certainly put ginger in that as well. And even though I do that, folks, when the idea came to juicing all those components together that I mentioned to you, I was like, I can't drink that. Let me tell you what, it's not that bad. You put lemons. I like lemons. I love lemons. I put lemon in my water all the time. In fact, you should put lemon in your water. In fact, if you're an athlete or you're a jogger or you're a runner or what have you, make sure that when you come back, the very first thing you do is you drink lemons with water. Drink lemons with water. That would even be better for you. But make sure you drink water with lemon out there because you need to overcome all that acid that gets built up into your system, and that's what the lemon water will actually help do for you. Anyways, it is all about health out there, and that's why we're seeing Annie's being bought out by General Mills out there, and it's one of the reasons why I would imagine Hanes Celestial is also trading to the upside. Had a request to go take a look at platinum from Danny in Atlanta out here. You got platinum is back $6 right now. I've got the continuous contract up on my screen. So as we take a look at platinum, let's go take a look at the A to B equals CD down pattern that I see in here. The 8-point inside of platinum is the high from the trading session from July 10th out here. That's a daily chart we're looking at. The B point that I would be using, it looks like the lows down on August the 5th. The C point, just a shallow retracement on August the 8th. We're now down below the 1 to 1.272. A to B equals CD. That says that what we can see here is a platinum get down to about the 1370 level out here. If we take a look at where the bulls are lined up inside of platinum, well, you've got a swing point that you are trading into right now. That's it looks like I've got about 8,000 contracts on that April 24th level. Today you are down into it with 10,000 contracts. So you're moving into a swing point with volume. Never a good thing. There's another swing point all the way back here that it could also be testing. That is February 4th. That's got 87 contracts. So now you got two swing points that have lighter volume than what we are seeing here today. Now, you'd actually want to go to the actual contract for that time period and check it out to make sure, as opposed to just using the continuous, just in case the volume doesn't come over correctly. But what is it that I see in platinum right here? We see no bullish reversal signal whatsoever. We see platinum most likely headed down to about the 1370 area out there. If it cracks 1370, more specifically, if it cracks 1361.40, you're going to see a move all the way back down to the December area. That swing point range in December is 1311 to the high of 1339 out there. I hope that helps Danny in Atlanta with regard to platinum. Let's see, what else do we have out here that we want to take a look at and discuss? Let's go take a look at what's going on inside of some of the sectors inside the S&P 500. Let's go do that. Let's go take a look at the technology sector out here. The XLK down 14 cents right now. Not that big of a deal as we take a look at the XLK here. It becomes a big deal if you see the XLK get below 39.66. So what's that all going to be about? I believe that Apple is the top weighting inside the technology sector out there. 39.66, that'll go ahead and break the daily profile low out there. We haven't seen a break of the daily profile low since the XLK has come off of the lows back here in April of 2014 out here. I'm just looking. Do I see really a crack of that area? I do not. So 39.66, that becomes the important number to be watching for inside the XLK. If the XLK were cracking here right now, you would see significant movement inside of the S&P 500. Why? Because it is just simply the largest weighting within inside the S&P 500. How about number two? Let's go take a look at the XLF. The XLF back 1%, down 23 pennies as we speak right now. The XLF needs to crack 23.12. If it cracks 23.12, then it may be breaking a swing point to the downside. The actual swing point low is 23.16 actually from August 28th. That swing's got 20 million shares. You're moving into it, so that does not look good. You're moving into a swing point with volume. 13 million shares so far this morning. We've only been trading for an hour and 17 minutes out here, so you've got volume picking up to the downside inside of the financial sector, the number two weighting inside of the S&P 500. Let's go look at numero trace, number three. That'd be the healthcare sector out here. XLV is the ticker symbol. That's back just slightly down 9 pennies out here. The XLV is strong like bull out here. Do we see any reversal signs? No, you don't see anything. In fact, we saw a test of a support level, the old resistance area. We saw a test of that a couple of trading sessions ago on September the 5th, and that was at 63.25 out there. What does the XLV need to do to start getting bearish out here? It needs to move below 62.78 at a minimum. And it's going to need some volume. Today's volume so far, 964,000 shares. No big deal inside of the XLV. If we take a look at the energy sector today with a little bit of a bounce in its step, it's up 7 pennies. Let's go see what the XLE is doing. In fact, this is the weakest sector, one of the weakest sectors, or the weakest sector inside of the S&P 500. And interestingly enough, this is day number 2 of testing its market profile low out here. And that's at a price level of 95.32. The actual low this morning, 95.32 out here. We'll see if this area holds. If it does, you can see price bounce to the 96.43 type range out here. The real key is going to be what goes on inside ExxonMobil, what goes on inside Chevron, Schlumberger, to name a few. We take a look at the XLE. It's also trading down into a swing point. That swing point happens to be from August the 7th out there. That volume, 13 million shares. Yesterday you moved down into it with light volume. You didn't reject it. You didn't close above it. Today so far we've got volume of 2.5 million shares. If math serves me right, we're moving down there with still kind of light volume. Right now, we've got the Dow. It is off about 84 points. S&P down 9. Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 77. S&P is off 8 right now. NASDAQ Composite down 17. So let's take a look at a couple different things, get an idea for what's going on as we speak right now. If we take a look at things that we want to pay attention to, I'm just looking for them on my screen out here. We're going to take a look at the VIX Index. Got to take a look at the VIX Index. Right now, it's traded down at $13. The key level, 1274, 1273. We have seen about 1, 2, 3, 4 of the last 5. Now it's 5 of the last 6. 6 days where the VIX is flirting. It's just flirting with that 50-day exponential moving average. So far, that level has been rejected. If it gets rejected again today, no real confirmed sell signal inside of the markets. Right now, it's trading just slightly above that area. That you want to pay attention to. What else? Whoops, I didn't mean to do that. What else do we want to pay attention to? Well, let me go take a look at I mentioned this, I can't recall which show, so my apologies if I duplicate this. What we also have simultaneously occurring, number one, we had the New York Stock Exchange last Thursday give us a sell signal as the summation index ticked down out here. We saw it tick back up on Friday, back down again yesterday, and some follow through today. Now, what we've got inside of the summation indexes for three of the key indices that we look at, the NASDAQ Composite, it has just turned red out here today. By turning red, it is an indication of a signal of a change in trend. How far where's that going to take us to? A 44.85 inside the NASDAQ Composite would be an area that I would be watching for. If we take a look at I think I've got the Dow as well. If we take a look at the Dow, here we go. We've got the Dow. The Dow, first time that we've seen, the first day where we've seen the summation index tick down with the oscillator below the zero line out there. So we want to be paying attention to all of those. And from the bullish side, you want to see that oscillator turn back up. You don't want to see that. It's an indication of an impending correction. It is a full moon, and markets typically will move down into full moons. Those are bullish. If we take a look at what's going on a 120-minute time frame chart for the ES Mini out here. Let me see if I've got my chart, and let me put this up on the screen as we take a look at the ES Mini right now. What happened to that chart that I was looking? I guess maybe it was a 300-minute chart out here. As we take a look at the ES Mini, what we're going to see is we're trading down into its market profile low. Let me put my cursor out here. This is a level that should act as support. 1990.20 is that number. We're at 1992 as we speak right now. We've also got a lot of bulls down here. We've got some bullish reversal signals, some morning stars that occurred down here on the trading sessions of September the 5th, on the trading sessions of August the 28th. So we've got some bullish support out here. 1990.20 is a level that you want to pay attention to. We're seeing a little bit of a bounce right now. Well, why are we seeing a bit of a bounce out here? Well, here's an area that we can take a look at. Let's take a look at the 10-minute chart here inside of the ES. What has it done since this little high that was put in here at 720 this morning on the 10-minute chart? Well, it made a price relative strength divergent pattern as it was doing what? As it was getting to that seventh wave, that little seventh trough wave, potential seventh wave on the way down. The reality is that this is more likely or can be a continuation move if we take a look at that little trough D that was formed out here. So we've got a couple of different counts, but you do have that little G area. If you see a move above 1996, that probably was some type of intra-session low out here inside of the market. Oh, I didn't want to grab that necessarily. I've got to come back and start that. So we see what that alternative count could be here in the Chapman wave. So you got all those G/Cs. Hey, speaking of the Chapman wave, how about stay tuned? Because our man Basil Chapman, he'll be up next, and he'll tell you what's going on. It is Terrific Tuesday. After Basil's show, we've got the Options Hour. Then Daryl Martin, David White, Tom O'Brien from 3 to 5, and the Andy Heck Show from 5 to 6. Folks, have a terrific Tuesday. As always, been great to be with you. I look forward to seeing you bright and early tomorrow morning. Take care now.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
This is TFNN.